Welcome back, traders. My name is Manuel Fonseca, founder of Smart Habits. In today's video, I'm going to explain to you the key to market direction, in which I'm going to explain to you a pattern that is called swing high and swing low. And also I'm going to explain a concept which is called strong high and strong low. These are paramount to understand the real market direction. And if you have ever felt confused and overwhelmed with complex trading strategies, I kindly suggest to you to download my free ebook, which is in the link of the description. No more to say, my friends. Let's start with the video.
Perfect. Okay, so now we're gonna start with the explanation of this concept, which is called swing high and swing low pattern. Let's go to a definition. Let's go and let's explain the pattern, and then we're gonna see another important pattern or definition you would need to identify the real market structure. Okay, so let's start with the swing high or swing low pattern. Let's read the definition. So the function of the swing highs and swing lows is to define the market structure and indicate the current trend. That's simple to understand. And it also helps us to identify the strong high or the strong low, something we're gonna see in a minute. Okay, so all the impulses we have covered, we have seen in the explanation of the basic market structure, right, are called swing highs and swing lows. So lower, for example, in the example of an uptrend, we have higher highs and higher lows, and those and the big part of edge is called the swing high, and the lowest part of it is called swing low. But to be clearer, let's see the definition right here. We have it here. So it says swing high is a price pattern where the market forms a peak with a higher high than the candles in both sides, indicating a temporary resistance level, as we are seeing in this small example. So most of the cases is a three candle pattern, which we see here. The highest part, which is this, okay, this middle candle creates a kind of a resistance level. I don't like to call it like that, but it's it's formed. So it's the highest part, correct? And then the other candles in both sides are lower than it, okay? And now, the peak or the higher high, let's say, this is called the swing high, right? Now we have the swing low, which is the definition is the next. So the swing low is a price pattern where the market forms, okay, through with a lower low than the candles in both sides, indicating the temporary support level. So it's like the same pattern, but in reverse or backwards, correct? So same story. We have three candle pattern. Right now we have the lowest part of the price is the swing low, and the other candles right in the right or in the left are higher in this case than this one, and this creates a support level. Okay, you can find all of this in every impulse in the market. So all the market is surrounded or is practically made of this type of patterns, correct? Now, when do we know this pattern works, okay? Or where is it located? When do we look for this type of patterns, right? So for this, I'm gonna go back to the explanation we got in the previous video. So if you want to see any detail, I suggest you to see the basic market structure video. So remember that the price or the market has three main stages: uptrend, downtrend, and consolidation, right? So as I said before, the swing low and swing high pattern, you will find it, for example, in the example of a uptrend, in this higher low, here you will find a swing low pattern. And this higher high, you will find an example of swing high pattern, right? There always will be three candles right here and always three candles right here. So all the market is full of it in an uptrend and also in a downtrend. Now, when do we find that when do we have to be conscious about this pattern? In this stage of consolidation, right? Because in the consolidation stage, when the price gets trapped between a low and a high, right? There is when the market start forming or creates the last, let's say the last swing high or the last swing low, okay? And then is when we have to be aware of it, because it means that the price is showing signs of changing the trend, correct? And then is when we have to be very aware, because there is when we spot the real market change, okay, or market shift, okay? Perfect. So in consolidation stages at the beginning or the ending of the uptrend or a downtrend, there is when we start like looking for it. So then you would ask, okay, Manuel, you have already explained to us that there is like 3 candle pattern, correct? That shows certain temporary resistance or support zone for, but why is the reason of that pattern? Why it changes significantly or perception of the market? Well, because once you identify this pattern, you can understand this, which is paramount to understand the market direction, which is something that is called a strong high and a strong low. So this is the definition. I explain it in other words, but I have found that many people like to see the definitions, correct? So the strong high is a swing high that fails to be broken, okay, and causes a break of structure, pause, to the downside. And it shows that the sellers were strong enough to defend right that level and push the price lower, indicating a bearish strength. Okay, that's a definition. In my words, okay, it's just the ending of an uptrend, correct? Because we're seeing the example of a strong high. When you identify the strong high, correct, you are mostly watching the ending of an uptrend. So how does it work? So we need to understand, or we need to imagine that we are in an uptrend, correct? And here is when the swing high pattern and the swing low pattern plays an important role. So as I said before, in the last swing high right here, correct, we identify this. We just identify the pattern. So here is the swing high. The swing high is created. And then after the swing high is created, we find or we spot a swing low, okay, which is also created. So it helps us understand 2 things. The market will start the consolidation stage, right? And there's likely to start also probably will start a market shift. Now, when the strong high and strong low appears, so as it says, we have here the strong high, sorry, the swing high, correct? The swing high is created, then the swing low is created, and then happens the next. The market makes certain pulses, like this one, for example, and it takes the liquidity or the swing high. All of the what is here are its liquidity, right? In a further video, we're gonna see what is liquidity, but what I wanted to explain is that there is money accumulated here, so the price keeps going up because it's an uptrend. But after this movement, after taking the liquidity of this high, right, or in other words, taking the money, because here is hidden money in the market, right? It takes all the money that is here, and then the price changes the direction. It could be in any type. In fact, it doesn't matter how it changes, but with the body of the candle, it can simply break or make a break of a structure, which is a boss. All right. And with this boss, it pushes down. So now the definition we just read has, let's say, more sense, correct? So it says the strong high, okay, especially this part, it shows that the sellers that are here were strong enough to defend that level, which is this one, okay, to push the price lower, indicating a bearish strength. And this, when the price breaks with the body of the candle, the swing high becomes into a boss, which is a break of structure. And now, and this is the most important thing to understand, the higher high or the highest high that is already created here, so it means these two candles, correct, becomes the strong high, okay? Because as its name says, is the position where the sellers could defend. I mean, is where the sellers defend their position, right? And it means that the market is making a shift, right? So it means that we start like looking out for selling orders rather than buying orders. And this is paramount because when you understand this concept, you can spot where an impulse starts or where it doesn't, right? And most of us get trapped because we do not understand properly this type of movements. All right. So this is an example of how the swing high and the swing low can help us spot in a consolidation stage, which is like the ending of the impulse, right? Or an uptrend in this example, help us spot the beginning, right? The beginning of a market shift. And what is the meaning of that? That we can take this as a, well, we take this as an advantage for us to start like spotting certain setups, you know, or at least understanding the main direction of the market. Because when you see, I'm gonna put this example briefly. Most of us, when we were learning this trading thing, when we see this, we see a bullish trend, right? And when we see this, which is a small version of the swing high, look, and the swing low pattern. So swing high is created, and then you create a swing low, right? So from the swing low, the liquidity is taken, makes a boss with a body of the candle, and then we have the ending of the range, correct? What happened after this? I'm gonna show you a pattern trap that is there in the market to make you think you are correct or not. So most of the traders, when see this type of patterns, they start like looking for example, here most of the people start buying, right? Because they see this uptrend. So they put orders right here. Yep. Let's say that the price goes a little bit down. The price always will go a little bit down to activate your orders or activate your money, let's say. What you didn't spot is like this is a consolidation stage, right? There is a swing high, a swing low pattern, and then a strong high. Yep. Now, what happened after this? What happened after this? The boss is created. Here is a break of structure, right? But since you just grab the information, which is an uptrend, you imagine or you expect or you predict that the price will keep pushing up, right? And this is the question: how many of you have lived this type of order, which you just enter at the market, like in this zone, the price goes a little slightly up and then takes you out or takes your stop loss, and then probably lower, keeps pushing up, right? So this is an example of why is that important to understand this type of patterns, especially the swing high and the swing high, the swing low, mix all of it to understand the strong high or the strong low. Okay. This of course has more, how can I say this? It has you need more context to understand when a proper strong high or a proper strong low works, right? But just for the sake of this video, I'm explaining to you where to spot it and where to identify it. Okay. Now we have this example of a bullish trend. Okay. Now let's see an example of a bearish or downtrend. example. Okay, so we're gonna do the same. Let me put this apart. Okay, here we have. So now imagine, let's imagine, my friends, that we are in a downtrend, correct? So the price is coming from here. You know, it's coming from here. Perfect. Creates a pattern of the swing high, then the pattern of swing low. But in a strong low, to identify a strong low, what we have to spot first is not the swing high pattern, not the swing high, but the swing low. Why? I'm gonna show you why. Because it's same pattern, but it's a little bit different. So once you have this, once you have this, the swing low in clear identified here, the swing low right here, then you identify as swing high. I'm gonna show you why is first the swing low and not the swing high. Now, once you identify the swing low first, and then you identify the swing high right here, there is when the liquidity taking occurs. That's what I was explaining to you. We need to find first the swing low. Okay, so now the swing low is created, then the swing high is created. From the swing high, the liquidity of the swing low is taken not with a body of the candle. It could be even with a candle wick. Let's put an example because it also happens, right? With a candle wick right here. Yes, and then the price starts changing the direction, and especially it breaks or makes a boss, right? A break of the structure right here. And once it make a boss, make the boss break of the structure, right? We have a new strong low created, which will be this place. And what is the meaning of this? What is the meaning of having a strong low? It says a swing low that fails to be broken and cause a break of structure right here to the upside. It shows that the buyers are defended and buyers defended that level, this level, and pushed the price higher, indicating a bullish strength, right? And this would mean the end of a downtrend, for example. Let's go to the examples of the downtrend. So we have here a downtrend, and in this example, we can see that we have here, this is a lower low, this is a lower high, but this lower low is also the swing low, and this is the swing high. Because remember that in each peak of the price, there is the pattern of the three candle pattern. Now what happens after that? The liquidity is taken, and then the price breaks with a body of the candle, indicating that the buyers defend this level well enough to keep to push the price up. Okay, and this is the beginning of a range. Okay, or it could be the beginning of a range. Okay, or the beginning of an impulse, or the ending of this downtrend. Correct. And most of the cases this small part is the consolidation phase, okay, or the consolidation stage. And these two examples you have already seen on this video help you understand the proper change of the market direction, right? Now, I have talked too much about the theory, and I hope this gets clear. Now we're gonna go to market to see how it really works, okay? And then we're gonna go and make our own conclusions. Let's go and see the real market. Perfect. Now we have here let's see an example of a swing high pattern and a swing low pattern. Okay. Now you're seeing here a very clear example of a downtrend. It's extremely evident, right? Now this you would say this is the strong high because it's the highest point of the market, and this is the strong low, right? I would say yes, definitely it will work. There's no problem. It's very evident. But we need to understand the next. And it's that this activity of being a trader means a lot of precision. So we have to be very cheeky in the way we analyze the market, because the more detailed is your analysis, the better chances you have to have a positive result. Most of the cases when we are learning to do this, we fail into go to like very basic mistakes. All right, let's try to identify the next. Just by simple eye perception, we can identify that this is the higher high, right? And we can simply say that this is the strong high. Yeah, but we need to confirm this through or analyzing the swing high or swing low pattern. And I think here is pretty evident. Remember that prior to this, so this strong high, they must be there would be a swing low, which is this one, right? This swing low, which is the lowest part of the market, right? And then a swing high. So this is the swing high. So what is the meaning of this? In a certain moment, the price was going up, as you can see in this example, right? Then start the consolidation stage, and then creates a swing high, right? Then it makes certain pattern, and then create the swing low here. You can see it here, the 3 candles. This is the lowest part of the market, and the 2 candles that are next to it are higher in this case, okay? And same story here. Now this, after this was created, the market took the liquidity of these two highs. You see these 2 highs here? So the liquidity was taken. And after the liquidity was taken, or the money was taken, so there were people executing here a double top pattern, for example, order. It takes the liquidity and then breaks with the body of the candle, making a boss. Okay, making a boss. All right. And this is the proper strong high where the price starts. Okay. Now, how can we analyze? Should this be the end of the market, like this would be the end of the market? Would be this the end of the market? Yes or no, my friends? What do you think? We have to analyze. That's right. So in this case, we analyze, is this the swing high or swing low? This would be the swing low, correct? Swing low is created. Then the swing high is created right here. This would be the swing high. And from the swing high, the liquidity is taken. But is this clear and evident? Not at all. Probably it was liquidity taken. If you can see here, there's a small candle wick, yeah, that could determine a take of liquidity, definitely. Yeah, let's put it right here. So this would be correct. And now this point here would be the break of structure, boss. Now, here is a good question you may ask. Okay, wait, this is the boss. Perfect. Is this, does this low becomes a strong low? Not at all. And you'll see that in the 4th videos, because I don't want to, introduce lots of concepts in today's video. But it becomes a weak low. Why? Because we're now started a bearish trend, and then this weak low, right, is broken. That's why it's called weak, because we start a downtrend, right? And now we would need to say the next. It's like, all right, once the weak low is broken, right? Is this still being the strong high? We have to keep updating the price, because if you started analyzing the chart, I don't know, on Thursday, August the 14th, okay, this was strong high, perfect. But if you go here on August 18, definitely this cannot be the strong high, because it's too far from the current price, and you need to keep updating the price every day. Now, you have to do the next analysis, which is understanding what is the closest very evident high, like this, like in this example. So this is the very evident high. This is very evident. It's the highest high that you can see here. And then you start analyzing the same pattern of the swing high and swing low. Now, let's analyze the swing high. Swing high is right here because this is the candle. So this is the highest candle, right? And is the highest candle among these three. And then we have a swing low that would be which one? This would be the swing low, right? Which is the candle that creates like a resistance level. Perfect. This is the swing high. The swing high is created, right? Then the swing low is created right here. And from the swing low, the liquidity of the swing high is taken, and then it took a time and then breaks with the body of the candle, making this swing low a boss, right? And from this point onwards, then we have a next impulse or next impulse, okay? And we can keep analyzing this every single moment. So this would be a weak low again, as well, yes. Weak low, perfect. And the same story, once the weak low is broken, but also this is determined or is called weak low because it also makes the end of the impulse. So right here is an end of the impulse. Remember that when it's ending, the first thing we see is the swing low pattern. Swing low is here. Remember that the pattern is this candle is lower than these two candles that I'm pointing right here, and then it's created a swing high right here. And from the swing high, the liquidity is taken, and from this liquidity taken, we have a break of structure, pause. Okay, pause, break of structure, right? And it means that is the end of this impulse. But because we're in a bearish trend, the price was not strong or wasn't strong enough to keep pushing up, or this level wasn't a proper good level, and then it was broken again. And then we do the same exercise of analyzing the strong high and the swing high and the swing low. All right. So if we zoom out, the same impulse we saw at the beginning, we can understand now that it has multiple strong highs and weak lows. Okay, and this is super important because once we understand this, we really understand the direction of the market. As an example of this is that once we saw this, most of the people start putting here buying orders. Okay, why? Because we are being taught, let's say, or we have learned through our Google market, the structure, patterns, all the stuff, that this is a double bottom or triple bottom pattern. And if this is a triple bottom, it means you should buy, right? And this is what people do. That's why the breakout structures are that's strong, you see, because it's with the body of the candle, very, very strong. And this ring candle you're seeing here is the candle that makes you put multiple orders. So imagine you're just executed orders right here. So you're just executing an order, a triple bottom pattern, right? So you say, okay, this go up, yes. And most of those patterns that we saw on internet teaches you that this is the correct point. So you put an order, you wait an hour, or the next candle is bullish. So you say, perfect, now I'm gonna put another order because I'm pretty sure my analysis is working properly. This is what happens. And then you start like feeling FOMO, or anxiety. You put another order. The price gives you this candle and you say, okay, yeah, and now it's going to the real, is doing the real movement that I'm expecting it would do. And then keeps going down and down, right? So It happens. So that is the reason why you should be very aware about this. Okay, and this is what it helps us to understand. Once you have a strong high, you realize this will keep pushing down, right? The price will keep pushing down. And you will ask me, well, Manuel, but then how do I know the market changed the direction properly again? I think that will be a matter of a next video, guys. But with this, I hope this example of this pattern of swing high, swing low, and strong high, and strong low, it's clear enough for you. My piece of advice is just go to the market, watch the theory explanation part, go to your favorite currency pair, and start analyzing this that I'm showing you, and put into practice, right? Once you put this into practice, you would realize if this that I'm teaching you really worth it. Okay. All right, guys. So if you really find this interesting, and this information I just provided to you is useful, subscribe, share, and send this video to a friend which is in the same position like you, wants to be a professional trader, right? Wants to pass certain accounts, has certain problems with the direction, and showing him, her, this video. Okay. So happy, so excited to teach you this, and I see you on our next video, my friends. See you.